without further ado, I'm going to let the panel introduce themselves, and then I will stand by and moderate as necessary. Christina, do you want to start?
Sure. Hi, I'm Christina Garcia. I'm with Secure Payments. It's a mobile payment platform globally in 10 countries.
My name is Aaron Press. I'm with LexisNexis Risk Solutions. We are a premier provider of data and tools for identity validation and verification.
Good afternoon. I'm Curtis Savallo, CEO of Gabry Incorporated in Digits, and we are a new kid on the block that has developed a new form of secure. Thank you. Now I'm somebody. Secure thumbprint purchasing.
So I think everyone's looking at me to moderate this panel. Obviously, I'm a little undereducated here, but I think we're talking about implementation and no, she's looking at me like no. Have I mixed up the panels?
Well, so the title of it was Tales from the Field?
Sorry.
Payment case studies and testimonials.
Correct, sorry, not right, payment case study. So I would just start with a really simple question of, as an in the field, you know, the battles from the field kind of perspective, what's probably your worst case scenario in what you provide as a product?
I'll take that. So in the field, I actually cut my chops in retail. I actually came from Office Max for a number of years, and I think that the worst experience I had with doing mobile payments was actually implementing the Google Wallet. Apologies to Google for it. And it was not that the technology was bad. It wasn't challenging to integrate with from a point of sale perspective, although there were two different ISOs that needed to be communicated from the point of sale, but that it was so limited in the reach that we really saw no adoption for it. It was probably way too ahead of where it needed to be. It was on one phone. We saw, a little whoop of usage, and then it was that, one person, who had the one phone that it worked on, and they got the free $25 in their MasterCard prepaid, and they went and they spent it, and then we really saw nothing else. And because of it, the associates, if somebody did come in later as they, went to further phones, they didn't know how to explain it. It was really hard to adopt, and that was probably such a bad experience from an associate perspective, from a retailer's perspective, that everyone's been very gun shy to adopt mobile because it was just it was defeat before it even really went out the door.
Interesting.
So my experience is not specifically us in the field, but more what our clients experience in the field. And so we really attack mobile payments from two perspectives. One is at the enrollment, and the second is at the transaction time. So what I find actually not so surprising, but somewhat surprising, is that the enrollment side has been a real challenge from an identity validation standpoint. So early mobile wallets, digital wallets of any kind, really, not necessarily even mobile, did not do a very good job of robust identity validation and verification. And so in a lot of these early wallets, if you had a credit card number of any kind, you could enroll it into your wallet and then go use it. I know because I have actually done that. Ethical fraud from that perspective. I had permission to use that number, but that did happen. And we've seen, even as this has matured, some of the wallet vendors failing to kind of really get that right up front. And then on the back end, we see our retail and especially e-commerce customers viewing mobile transactions as just another tender type, when in fact they have really different characteristics from everything from shopper behavior to device and fraud vectors. And so it's really important to make sure that your practices and the tools that you put in place are appropriate to this new payment type.
My foray in mobile payments, basically, just thinking back, when I was in South America working for Paramount Pictures, we helped develop a payment structure for the country of Chile for their espectáculos, for any type of ticketing. And that was my very first technology foray, and that was, a few years back. And it reminds me to this day when I go to any vendor or a restaurant or an event and I count how many steps it takes to make a purchase, especially using mobile payments or using a POS system that they have in-house, and how dramatically that's dropped over the years. Apparently, in the eyes of the merchant or the company that's selling the service, that's obviously where they want to go eventually, is dropping the amount of steps for making a payment for anything, instead of just getting your ticket, filling out your tip, bringing it back to the person. They go back, they put it into the system, come back, sign it, come back, they give you a receipt. 4 or 5 steps. Unlike today, with Apple Pay, you can go and order a taxi and pay for it right in one step, right from your phone. And I think that we're headed, with Digits, we're trying to develop that sort of nomenclature, I guess, and security process to be able to get there by being able to adopt the thumbprint technology that's already existing at both Android and Apple to make it successful. And with Digits being the new kid on the block, it's a working model, and it's very secure. The 72-point security protocol, random security protocol, is very interesting to many companies. Obviously, quite a few here that we've talked to during this wonderful show. And I think that the future has some really great benefits. And that consumer mentality of how many steps you're going to take, that's going to drop. And again, like I mentioned in another panel, whoever gives that customer service and that customer experience the best one is the one that's going to win.
Very good. So in following, this is kind of a two-part question, so I'll start with, so based on those, let's say, non-positive experiences, and I think, Christopher, you already answered some of this, did it change your overall company strategy or product strategy for mobile? So, yeah.
Yeah, I'll go ahead and take that. In our case, yes, definitely. It goes back to my story of how I developed Digits and how I came up with Digits, with the 87-year-old woman standing in line at Walmart with a basket full of things, and I have 3 things, and I stood there for 20 minutes behind her because she couldn't remember her PIN number. And she locked out of all of her cards because she continued to press numbers and not knowing what to do. And then the POS system being broken and having to manually take out everything, voiding everything one at a time. And I felt so bad to the point that where there had to be a better way. And that's where I started developing Digits. So I guess it did bring that to light to me, the reason why we developed Digits and tried to apply it to something that doesn't exist, or even now we're going towards applying it towards existing technology that's already out there and trying to add to it and adding another layer of security to that payment structure. So yes, it was very beneficial to how we developed our strategy.
Gotcha, thank you.
I think overall, all merchants have taken a step back in their approach to mobile payments and mobile technology. And a lot of what you're seeing in the field, like people adopting Apple Pay, they're not really adopting mobile payments. What they're adopting is contactless payments made via a phone, as opposed to a card. That's not merchants standing up and saying, I have adopted a mobile payment or solution. What I'm doing is just enabling another form of tender. I think it'll be a while before merchants and consumers alike truly adopt a mobile payment solution, because what we want to envision from a mobile payment solution is not just digitizing what we do today, but really expanding and presenting value. Which mobile solution is going to allow me to not only make payments, but secure that payment, allow me to do couponing, allow me to do loyalty, so that when I do transact, I'm not increasing my steps. I am truly reducing that checkout time. I am providing enough information and value to allow point of sale to complete the transaction that satisfies me and improves my overall shopping experience. And until we have mobile payment solutions and mobile wallets that really help complete that overall shopping experience by really making it better and value added, we're not going to see a lot of merchants really taking a stand at adopting any of those. And it'll be interesting to see what MCX really does come out with when they're done with their case studies, because they have taken a long time to come to market, but in talking with them and seeing some of the things that they're doing, they have approached it from that value add, from a real mobile solution strategy from payments.
So one of the things that I think is interesting that comes up a lot is the need to make a distinction between mobile payment and mobile commerce, at least the way I think about it. So, when we're talking about mobile payment, generally I think about that as a proximity payment, right? A wallet stored in some sort of device that I'm carrying around and using at point of sale. And I think you're absolutely right as far as the challenges that go along with that and the need for a better consumer experience. And so we've been playing on, like I said before, on improving the enrollment experience for the consumer and for the wallet operator, making sure that really works for them. And the other side, you have mobile commerce. And to me, mobile commerce is e-commerce. It's the same thing. It's a smaller screen. It's harder to input your information. And so a mobile payment solution is really one that that smooths that process, and it's whether the merchant intends to do that or not. So we see a lot of merchants who say, well, I'm not really doing mobile. Well, if you're online, you are. You're probably doing less than maybe you ought to be, and you have high cart abandonment rates because people hate tapping in that stuff. But so we've been adapting our products to help facilitate that, so that the identity and the credentials really can do the pass-through in a way that's effective and safe and creates less friction, ultimately more sales.
I agree with Aaron. One of the things that I find really intriguing to me is that overseas in Europe, specifically in Europe and in South America, they'll force you to make a payment with your debit card as opposed to paying with your credit card. The cost factor is less inhibitive overseas on a debit standpoint than it is on credit. And here it's at some points, depending on the merchant, it's actually the opposite. To a certain respect, it's usually a little bit less on credit, but they won't accept the debit as much, so they can use the logo and eventually pay, more than one way. And I've always found that intriguing, that overseas they actually ask you can you please use a debit card instead of credit? If you choose credit, I'm going to charge you X on top of it. Interestingly enough, a gentleman in Florida who I frequented for a wonderful Cuban sandwich recently put a sign up on his payment, on his POS system. We will be charging $1 for every credit card, every payment that you make with a credit card. And I asked him why. He says, well, look how much I'm paying per year just on the credit card percentage. And that really touched, and this was just about a week and a half ago, and I started thinking about that, where we have to go to be able to reduce that perception, I guess, on the consumer end and also on the merchant end, in the reality of of that payment itself.
Fascinating. So I've heard a number of things that really interest me here, and I want to start with the past analogy we're probably all familiar with, the whole QSR mentality, right? Until the brands effectively allowed small ticket, meaning no PIN, no signature, no nothing, the McDonald's of the world wanted nothing to do with credit card payments or debit at all, because it interrupted their transaction flow. And by transaction, I don't mean just the payment. I mean what they saw as the whole ordering the burger, everything, and a credit card transaction interrupted that too greatly. So it took at the time, a fairly major change from the brand's perspective to make that low ticket functionality work. And now, what would McDonald's do or Burger King if they didn't take Visa? But in that framework, what I'd like to ask is, do you believe that the brands, or even, I was going to say PCI, but really the brands, do you feel that they are involved enough with the whole mobile revolution, if you will? And if not, where could they help more? And I'll even throw in a teaser here, because coming from my technology perspective and everything that's happening, especially with mobile, I think the definition of card not present is certainly changing, if not going away. So any one of you three, have at it.
That's a good one.
So I'll take that first. So I mean, one thing that I get a lot of talks about regulation, and I think it's important for a lot of people to recognize that the payment brands have the virtual same effect as regulation. So like you were talking about how unusual it is for a merchant in the U.S. to ask you to change your tender type. Well, until very recently, they actually weren't allowed to. Like that's steering, and you couldn't do that, right? You couldn't put a sign up that said, no payments below $10, right? We won't take a card, right? Now you can do that under certain circumstances under Durbin. But you do see that more. And surcharging was absolutely
Verboten,
right? Not anymore, right? So a lot of this, I think, is the brands were sort of a stalwart against these things, but as they kind of give up, they're saying, you know what? Culturally, we're sort of ingrained to behave in this way. And the change is not that impactful to them ultimately. Around QSRs, I think one of the things that's interesting is I would say a bigger driver than the no signature rule, which there was important, was just the realization by the early adopters that ticket sizes went up when people didn't have to care about how much cash they had in their wallets. So I can walk into Chick-fil-A, we actually probably already took cards at that time, but I don't have to think about, do I have $20 in my wallet because my son is 14 and he's going to eat a 20-pack? I can just buy it for him.
Right.
I think to answer that question, we should probably segment brands. So I believe that the card brands themselves are very much in the discussions. They're creating their own mobile wallets. They're partnering with the likes of the Apples and the Googles to ensure that they remain very relevant in the ecosystem. And then as you look to merchant brands, I don't think that they are in the discussion enough, and I think it's because they are all taking a wait-and-see kind of approach. Consumers have more and more of a say in anything, and the merchants are really in this entertaining stage of their relationships with their consumers. And in that entertaining stage, they really want to help and form a bond and a loyal relationship with them. And their fear is if I'm driving them too much, I may, push them away, as opposed to, welcoming to what they want to say and what they want to do, and embrace them and, with what they want.
It's a fine line.
So they're
right?
very, and millennials are very fickle as it is, and they're 80 million strong now and spending more and more each day. So, and they'll move off of, this social or this mobile in a heartbeat. So they're probably in a wait and see, constantly always shifting to address it. And I think that the brands themselves, so the Apple Pays and the stuff, have to just obviously provide value add to ensure that they're incentivizing consumers and merchants to work with them and embrace them, like Secure does.
Fascinating. So actually, and that's good. That is, it's stirring my brain into other questions. So I'd like to stick with the brand discussion, but change yet again what a brand means right now. And so the question is, do you believe that mobile is driving more brand acceptance where it's not really a brand, it's a payment brand? So, some of it, as a number of you kind of alluded to, there's an educational background to the progression and integration of mobile into our lives. Well, as that education comes, again, speaking for me and to Christopher's point, more to my son, the millennial, he loves to spend my money, but he also loves to spend it in the form of Bitcoin. He gets the Visa, MasterCard thing, but he's a millennial. And I see that technology / educational growth is part of why he not only chooses to use a different payment brand, but also that he knows how to do that. And I thought I'd ask what's your opinion, or if you've seen any perspective in that regard.
The millennials are, as Christina alluded to, very interesting brand on their own respect. Actually, you can actually call them that. They have their own mentality. They are very fickle. They will switch on you in a drop of a hat. But at the same time, that population or that segment can become very, very loyal, especially to the different types of payment brands. Maybe not consumer brand, but the payment brands, as you mentioned, to the point where if I truly believe that if they're treated really well by that brand, by the Visa, by the Discover, by the Amex, with what Christina had mentioned earlier, the loyalty, the rebranding, if you will, of their own products, and giving them something that they didn't have before. Not only payment structure, but points, tickets, to be able to assume these other gifts, if you will, that they are looking for. I think that's where that loyalty of the actual payment brand is going to come from in the future, and it's going to be a bizarre battle because of the fact that some of these payment brands have been around forever, since I was a child, which is a long time ago. But at the same time, when I was younger, I didn't pay attention to them. I really didn't. Now I pay attention to when we go out to a trip together. Well, Amex gave me a free upgrade. Visa got me 2 tickets to this game that I really wanted to see that I couldn't get before. So immediately, in my point of view, is that brand loyalty is there with the payment brand that I actually use, and I think you're going to see that more and more in the future, especially with the culture that we're in.
Adding to that, I think that the successful players in all of these spaces, be it the retail, be it the payment brands, are the ones that really create the right experience. Consumers are all experience driven now. My shopping is not shopping, it is a shopping experience. And that end state of the experience becomes what the retailers really need to focus on. If you can ensure that they had a wonderful time in their virtual reality dressing rooms, looking at their jeans and the colors and the dresses, and if you can tap that off with a wonderful checkout experience, as opposed to a 20-minute queue and 30 minutes of questions saying, oh, do you want a pad of paper with that? Do you want a t-shirt? All that stuff. Then you'll cap it off. And the mobile payment provider that can come in to that retailer and work with them on delivering that right checkout experience to seamlessly create a great shopping experience is the one that's going to be successful.
Yes. So kind of actually maybe backing up to the previous question somewhat, but so I've been around the industry for a while, and I remember one of the payment brands coming to my organization with an idea for this really innovative mobile wallet solution, which was not particularly innovative or particularly mobile for that matter, although it could be used in that. And they were really proud of it. And they hadn't really thought much about the consumer experience, and to make it worse as a processor, they hadn't really thought about the processor experience or the issuer or the bank. It was just kind of, how do we maintain our brand? I would say that that has changed dramatically in the last couple of years. We've seen a lot more innovation coming out of the four major brands, and we actually had the Federal Reserve here yesterday talking about the innovation in bank-to-bank payments. So I think that we're starting to turn the corner, and I think we're also, we are less of a lonely voice when we say consumer experience matters. That's, I think that's a mantra that has been well articulated here. But at the same time, I think you can't ignore the other pieces of the equation. A bank has to want to deal with it, or there has to be some sort of financial backing behind it, and merchants have to want to do it too, to Christina's point. So, it's a three-legged stool, and you've got to make sure that all of that works. And I think the brands are just now really grasping that, along with, frankly, a lot of the rest of the industry.
All right, no, I agree. So I don't want to hog all the questions. Any questions from our audience for the panel? We'll go over here.
Has there been any reluctance among consumers from where you said that Christina's been Office Depot before, and that based on the breaches that made so much headlines, and that would consumers be reluctant to share their personal data with retailers like Target and Walmart and that if that's what they need to have their mobile wallet take off without the card readers involved? In other words, you have to sign up your personal information with the retailer. Is anybody going to be excited to do that? My guess, based on just talking to neighbors and friends, maybe not.
That's an interesting question because we have to talk about who our consumers are in that space. A lot of the consumers that have gone through these breaches have not stopped shopping at these merchants or retailers. They got a new card, Visa, MasterCard took care of whatever charges weren't theirs, and they're good to go. The merchants really felt the pain of those breaches, and Target still does. Millennials have been known and across numerous surveys, and there are numerous selfies and popping in, and they don't mind sharing their information as long as there's a value to it. Then there's we still have the generations before the millennials that are a little skeptical. So I guess I think it depends on what solution is the one that's going to store that information. What's the information are they giving? Am I just giving my payment information? Am I giving away something that I don't want to be compromised? As we saw, lots of people use the Apple 6 fingerprint device scan. They're very fine with that information being stored on a device, even though if for some reason that information got compromised, it would be compromised forever. It's a value scale. How much information am I willing to give versus how much value? And I think that everybody at a point in time makes those decisions, and they are willing to give a certain amount to get a certain amount of flexibility. I think that the brand is the key. Which brand am I giving that information to? Am I giving it to Target, or am I giving it to Apple? Am I giving it to Google? Which is the brand that I'm going to be more loyal to and be more comfortable and safe with? I think that I'd be more comfortable and safe with an Apple or a Google than I would Target right now. And I know you're to your Target. I'm just, I don't want to put you on the spot, but so that's part of it too. What's that brand? that I'm giving that information to, and what's the value I'm going to get for it, and that's the equation. If we had to put an algorithm together, that's the algorithm everyone's going on in their mind to say, oh yeah, I'm willing to give that information if all I have to do is put my fingerprint on a device and pay and go, and
Yeah.
So I would say that presents a really interesting opportunity for financial institutions. I don't trust my financial information with social networks. I don't think I have a single social network account that has never been compromised. I don't know if they got any meaningful information, but for some reason my friends think I'm selling cannabis, which I'm really not. But so the financial institutions, I mean, that is one organization that generation to generation has trust with sharing information. In fact, you have to. If you want to be banked, you have to give them a lot of information so they can validate your information, hopefully against my company's data. But in any case, they really want to, they have legislative, regulatory requirements. They have to know their customers and really validate. And so we're used to that. And so to the degree that these organizations that have that level of trust can do the enrollment, I think there's a lot of value there. I don't think that, unfortunately, I don't think banks are often terribly innovative. And so they are lagging behind, which is why we continue to see some fraud issues here. But I think there's definitely room for improvement.
And if I could, even as a stand-in moderator here, I'd like to make a couple comments about that question. To both Christina and Aaron's point, and in fact, let me back up. We've been applying a lot of this to the millennial, but I think that's absolutely appropriate because in the mobile world, the reality is I don't think my son is necessarily any smarter than I am, but he certainly has a certain innate savviness about cell phones and all the things that surround that, right? And I think your points were spot on, but I think another key thing is it is the ease in which they're going to provide that data. And that even changes or may modify. You talked about, am I going to give my information to Apple or is it to Home Depot, right? Big difference. However, someone asked me, well, I'd love to give you deals and coupons and everything, but I need to know more about you. I don't want to take 10, 20 minutes. I don't even want to take 3 minutes. I want to be able to fill in one line that here's my Facebook link or here's my LinkedIn link. You figure it out, but I still want all those benefits. And I think that's a critical point is, the provider that can make it super easy for me to tell them all about me, that yes, I'd much rather have, some discount on a sailing package on Lake Michigan than a gift certificate at Filene's Basement. Nothing against Filene's, it's just not my kind of store. But I don't want to have to take any additional time telling that whoever about me. And I think that's a critical point.
Michael, you have a question?
I just want to offer a counter with an anecdote on the whole trust issue with Target. Yeah, it's back there, right?
Yeah.
So when I was in college, I had a 3-week trip to Egypt. And that December, there was a terrorist attack where a bunch of tourists were killed. So we had this big meeting to decide whether we were going to still go. We did decide to still go. In fact, we decided, contrary to advice, to go to Luxor, where there's lots of history to be seen, but which our tour guide advised we not go because that's where the attacks happened. It really hit home to me, though, that that was the perfect time from a security standpoint to be in Egypt. They rely on a tourist economy. And so because they had been attacked, and attacked in that way, they were hypersensitive to that security. We had an armed guard in our bus whenever we went outside of Cairo, right? A submachine gun on our bus to protect us from an attack. So I guess I would submit that it's counterintuitive, to be sure, but the businesses that have been attacked by a breach are absolutely hypersensitive to that security in ways that other businesses that I've talked to, even at this conference, are not yet there. So I get that consumers would certainly have that contrary viewpoint differently, but in actuality, maybe that's a message that we can distribute here. We're in pretty good shape at Target.
One of the opinions I have regarding this question, what we're discussing, is as radical as it may seem, and again, I've been accused of worse, but I think it really, the three credit reporting agencies that we have in this country that do all the credit reporting for the consumer and for banking and for credit cards and so on and so forth, that information that they're requiring for those purposes, to me, I think should now be more abbreviated, which would help the consumer feel a little bit safer on exactly sharing their personal information. Not everything, especially with the glut of the selling of personal information to telemarketers from the late 90s to just today, that continues to go on, and that industry of being able to sell that information for the highest bidder. It's just been, it just boils down again, to me, back down to the fact of loyalty, of who is, like Christina said and I mentioned earlier, who is going to give the best customer service. And on the reporting standpoint and the information that's being shared for critical purposes or for credit purposes or for anything, if it was more abbreviated and not have to give everything, I think the consumer would feel so much more safer or have more of a peace of mind about the fact of the matter that they are giving that information out, instead of having to go, well, you know what, I have to give you everything to be able to get this. Well, I'm not going to. I won't take it, when in fact the merchant would benefit so much more by doing it that way, because they're going to capture that customer and finish out their end result of what they want to accomplish by just giving the customer exactly what they want.
On that, I'm afraid we're going to have to close this panel. I'd like to thank all our panelists for a very interesting session.
Thank you for coming.